Hey, good morning. Tom here, FlipAnything USA. So I haven't been live here, since this morning. I gave you guys a heads up that Chris was coming. So this is my friend and also a mentee, Chris Parker.
Yeah. Hey, guys. It's good to be here this morning. And I got the early text from Tom, and of course I was awake. I got kids at home, and it's good to get together and chat some real estate this morning.
Yeah, and actually I was replying to Chris. Chris had asked me to see if we could have some lunch or something sometime, and I thought, I'm an early bird, so
yeah.
And I know he is now because Chris, your life has changed some because you quit your job,
yeah,
and you kind of became the house dad or whatever what the terminology is.
Yeah,
right?
I mean, it's definitely still a shared load between me and my wife, but we do have a rhythm. Like I take the kids to school every day. She picks them up.
Yeah. Basically, he's gone full-time investor.
Yeah, and it's a wild change. I mean, when you go from getting that just regular same amount paycheck every single month to I don't have a paycheck coming in, but then all of a sudden I've got a check for $30,000. Like, I mean,
and then you say, and then you can start doing the math, divide your old paycheck into that. You can realize how long you can live, basically the same.
Yeah.
And the goal is make some more money before
exactly
you run that out, right?
Exactly. And so it's a new world crunching those numbers, but it's really fun, and I'm really enjoying it.
I got to say, because my whole life, I got married when I was 27, and I was already a millionaire from real estate. And my wife was, a bit younger than me, and then we had 4 kids. And so, my wife would go to work. I mean, she didn't actually go to work after we had kids. We had kids maybe 4 or 5 years after that, or a few years after that. But what I did was I took my daughter everywhere with me. I'd go, I'd grab her in the morning because the wife would need to sleep in, and so I would take her to coffee with me and read the paper and check for, look and do my rounds in my neighborhoods and drive my barbell and all that sort of thing.
Right.
And that was always great. That was very nice. And anyhow, we're gonna get into it here. We'll talk about some of Chris's latest deals, some of my latest deals. As you guys know, I bought about $10 million worth of property. I was kind of doing the math out loud this morning in my mind on figuring out how much money I've made on those investments in the last 6 months, and it's actually kind of staggering, even for me. I'm kind of surprised.
Yeah.
But we'll be back. Okay, I guess everybody can hear us okay. Are you in the YouTube too?
I'm just watching silently.
You can also go in the comment and chat with the guys too.
Yeah.
All right. So, anyways, I was sitting there and I started to think, because I just put a property. In fact, Chris just said he saw it. I just put a property up for sale I bought about 4 months ago. I paid $2.5 million. I put it up for $3.5 million. I don't know if it's going to sell for the 3.5, but there's a good chance it will.
I mean, they're just gobbling stuff up as soon as they see it. Even at ridiculous prices.
And there's a lot of what we call stupid money around here now.
Yeah.
And people desperate to kind of throw their money into something else, and you never want to be that guy. And people feel the pressures of 1031s and that sort of thing. And
well, I think. Do you think it's also maybe? I mean, yes, stupid money, but people have quote unquote money to blow, and they're like, you know what? This thing has appreciated so quickly, so fast in this area. Sure, let's go and throw some money at it and see if it keeps going.
Yeah, and I'm not even saying that mine's a bad investment at $3.5 million. I think it's an okay investment. I bought it under market. That I know.
Yeah.
So it's hard to say, but I have seen people pay full value for a property just because they had 1031 money, and then the market subsided, and then they were upside down, which is never acceptable for me.
I saw somebody, the house probably, but there was a house in our neighborhood. It was on the corner, right across from the park, and of course I tried to buy the house under market value.
I wish I'd have bought it full price.
Well, but here's the deal though, is somebody did pay probably full price, if not more than that. They're going in there, they're ripping everything out,
right?
And I'm like, you can't make money on that.
If they're going to make that their home,
it's an investor. It's an investor though. It's going to be a rental. I'm
Oh,
like,
is there?
I'm like, how are you going to make money off of this?
And there's a lot of that going around here. We got some guys that'll come in here and they'll buy, start with one or two, and pretty soon they own 20 houses, and they're doing well. They're doing okay overall. I mean, I know some of the portfolios that I've seen, because the market has continually gone up, but they're speculating.
They're speculating on appreciation, right?
Yeah, and so when they pay full price today, they're speculating. And
right.
there's a handful of neighborhoods where I think that's kind of a safe bet. Others where not so much.
Yeah.
But just on my own in this particular neighborhood, because me and Chris actually kind of have a shared neighborhood. The last properties I bought one for $275, $303, and $320.
Yeah.
And none of them are worth less than $450.
And I'm going to use those to protest my taxes.
I know. I want you to.
Yeah.
Yeah, I want you to. This is the other time we start to fight our taxes here now. And hey, good morning, Robert. In Delta. Similarly, you basically in Texas here, it's a pain in the ass. They will mark your property up every damn year. They'll take up 0.5% of all the sales, or of all the properties that maybe that much is on the market, less than 1%. And then people that come here that are kind of desperate to make a purchase because they're hired, they got a new job that pays twice what they were getting paid in California or somewhere else, and so they can go ahead and afford to pay $30,000-$40,000 over market. And then somebody behind them does the same thing, and so they're artificially raising the values in a lot of these areas. And it's just silly because if we just had 5% of the real estate in the neighborhood for sale, the properties would just drop like a rock.
Yeah.
Because because not everybody's so desperate.
52%.
What's that?
They're raising. They're saying that my value went up 52%.
Oh yeah, that's nothing. The building we're sitting in right now, they raised 100%. So, in fact, I wrote my lawyer this morning, and I said, this is my super lawyer, my really good lawyer, expensive lawyer, but he's a genius and he's got a photograph memory. But I use him for when I have to really have something important to me. And this has become more important to me because I'm spending, 15, 20 grand on appraisals, just for several years appraisals on this property. And this is because I'm preparing to go to court. I'm actually not accepting the informal or the formal hearing. I don't accept it. It's stupid. The people are incompetent that we're judging the thing. Mm-hmm. So I'm combating this with facts and with people that are much smaller and more smarter and more educated than the people I've had to deal with so far. And so we'll go to court. And that's one thing I can tell you. I'm a big believer in the court system. You will get justice. It's very expensive to get justice. But in my situation, so I spend $30,000 or roughly on just maybe legal fees and the appraisal fees. I've wasted 3 years, so I've paid for 3 years. I've paid $42,000 more a year than I should have. So that's $126,000 that I want to get back. Plus, I'll get court fees. So, but we're going to arbitration here pretty soon. So I called my key guy. See, and I'd really rather you handle this arbitration than the current lawyer that I have. He's been not as stable as I like, and I don't trust him as much. Right. But so I'll yank him, and I'll put my guy in there for the arbitration. And I think that he's a better litigator in general, I think. But I think what we'll see is we'll get it settled up.
Yeah.
And, I'll get all that 120 back.
I mean, for me listening to that, just as a rookie investor, like, it makes me a little bit nervous knowing that could come down the pike at some point. But
yeah, well, the worst thing you do, the worst thing you do is you sell the property. But I told you, I said, look, I'm not going to sell this property to prove you guys don't know what you're doing.
Right.
And that's about what I'd have to do.
Right.
But you get to more intelligent, better minds as you get into the court system. As ultimately you get to the court system, and now you're playing before the judge or before a judge and jury. It's not hard to understand. It's basic math in the end. So it's what you got to do.
That's good.
Let's see, real quick here. Warren Buffett, he's a big fan here, I guess. He just wrote, "Hi Tom, good interview. Any reason you haven't added any meeting videos to the mentorship since?" Actually, I've been busy, but I added 5 yesterday, by the way. So we're 100% caught up. You have everything right now.
There you go.
Oh, and that's not true. It hasn't been since January. Warren, I didn't know you were in the mentorship class, but but anyways, you should be 100% in there. 5 just went in. The last
good.
5. Robert Richards, property taxes are going up because of the high value of the property. Well, yeah,
Yes and
it's
no.
true, Robert. But what I'm telling you is, you can't measure less than 1% of the market and extrapolate that to carry over and say that's what everything's worth. Because if 5% of the market was available to buy, all this shit would drop like a rock. It's just that we have more buyers than properties, and if we just had a little more properties on the market, we wouldn't have it. So what's going to happen is they'll catch up with properties, and then the values would drop. But the tax authorities don't like to adjust back down. So it's just silly. It's not fair, and it's crushing people. And here's another thing. On my commercial properties, I pass all those taxes through to my tenants. So if you just did an average, if I have 10 tenants in the building, they just raised, $42,000 a year. That's $360,000 per tenant I would have to add to their rent. And not to mention, I might add a little bit for cost of living and everything else that I have a right to do. But I'm not going to do it because they're getting crushed. Yeah, it's just they're getting crushed. Yeah, no, I understand. But so tell us what's going on with you, Chris. Chris he's got a property. Let's talk about your property. He's got a property bought a while back, and he did a great job negotiating it. And you'd come and talk to me a while back, and I was saying, sell it, okay? Because I think you're ready, and it's time to move on. Because he's getting too small of a return now. He bought a great deal, and that's what happens is, a lot of times I tell you, houses in general don't have a great return that you pay more than $300,000 for. Now, he's doing an Airbnb, so it's a little exception to that. But it's still gone up so much in value that I think he can make better use of his money. And I assume, what are your findings? What is your conclusion?
Yeah, so I bought this property back in 2016, 2017. It was actually the first property we ever bought, period.
Right.
Like ever. We took money out of our IRAs or mutual funds or whatever it was, just because I knew.
That's you and your wife.
Yeah, me and my wife. I knew because I love property. I love land. I love, the hill country. We're here in Texas, and I love getting out in the hill country, and it was always my dream to own a little piece of it. And this was, like I said, this was 5 years ago, 6 years ago, and we had just got out of debt, cleared all the student loans, cleared all the credit cards, and so we had no debt whatsoever. And it was like, all right, we're gonna gift ourselves by buying some real estate. That's what I wanted to do. And whenever I was out there fishing a river one day, I was driving back up this hill, and there was a for sale by owner sign in the yard, and I knew immediately. I was like, I got to get that thing. Whatever it takes, I got to get that thing. And I called him up. We started talking, and the price was very decent. And I knew that things were moving that way. I knew our market. I didn't know. I was speculating the market would be getting hot. Things are pushing out, and it was waterfront, and water in Texas is gold. I mean, if you can get anything on the water.
Didn't used to be that way. It used to be everybody had a second home on the water out here. It wasn't a big deal a long time ago.
Right.
But anyhow, and I'm going to fast forward a little bit because I want to get to some more of the other stuff. You're going to come after that.
Sure.
But you put that deal together, and you bought it, and you got it financed, and you had to go through some hoops. I remember on that.
Yeah.
We talked about that before. But you got that thing done, and now you've held it 5 years. It has gone up quite a bit. And why are you selling it? Let's think about the numbers. Why are you selling?
Good. So bought it for $155. Okay. And bought it for $155. We didn't even know at that time that we were going to be doing Airbnb. It was more going to be a weekend home, like you said.
Wow.
And it was just so fun.
And he was renting at this time. He didn't even have his home. Like I said, this was his first property that he bought.
Yeah. And so it was going to be our weekend getaway, me and my wife working on the cabin kind of thing. It's how we spend time together, and we really do. We love doing projects together, and so we really flipped that place, made it beautiful. Then we had kids. It's like, we can't go out there every weekend. And so I put it up on Airbnb, and it started pulling in like really good money. And at that time, still, the home value was still only maybe $200, $220, $230, $240. And so it made sense to Airbnb. And it was, the Airbnb was taking care of all the bills, and I was getting a little bit of cash every month as well.
Yeah. So the thing with that Airbnb, you can take a property that if you rented it through normal means, it might just be a wash or just a mediocre investment.
Right.
But when you turn it into an Airbnb, now you're creating a job. You are creating a job. You're creating work. But it raises the income significantly on the asset, correct?
Yeah, totally. So, I was making probably anywhere between 10, 20,000 a year starting out, and then almost got up to 25. Mm-hmm. So we were looking pretty good. But then I got an appraisal done. I was like, how much is this thing worth? I was able to pull $100,000 out of the house and go buy more property.
Right. In the form, you just pulled a second on it, or a new first?
Yeah. And so I went and bought 2 more properties. One I flipped for $30,000 profit real quick. It was the mobile home vacant land deal. And then the other property I bought was another house in town. And that one I flipped, and it's under contract right now.
Yeah, so he did kind of the classic investor move that we all do. Is once you get an asset that you want to hang on to, maybe you don't have something to roll it into. Anyways, if you did get the cash, you extract the cash out to buy better deals.
Yeah,
and you made some money on some of those deals.
Yeah,
yep.
Yeah, and one of them's pending, and cross my fingers.
You did the one thing with your buddy too. You did he's already done some, and now he's starting to forget some of the deals he's done. I think a little bit.
And so now we fast forward. I got to the point where I'm like, okay, because I did the refinance, I took the cash out, and now I'm looking at the numbers on what this thing is pulling in.
Yeah.
I'm like, I just don't know if this is worth it anymore.
Right. And we had this discussion before, and one of the things, just my self-examination, I was trying to transpose it to him, is you start to look at how much money did I make with $10,000 or $15,000 like you did already after you made this initial investment. And then you start to think, well, what could I do with $300,000, or in your case, another $450? That's after pulling $100 out. So really, you've got a net $550 in this, pulling your withdrawing basically.
Right.
And when you start doing that, if you think, God, I turned 10 into 20, can I take 400 and turn it into 800?
Yeah.
Yeah. And so it's a wonderful to see where he's at. The other lesson that I got, and I reflected because I used to be in his situation at different parts of my life, and I was saying, and he'd bought a property that had a trailer on it, and he had some plans to do some, and he was coming up with, well, I got to drive a half hour or 40 minutes there.
It's an hour and a half.
Oh my God.
Yeah.
Okay, I was going to think about Atlanta. Scratch. Yeah, I was thinking about heading out, and I didn't know it was quite that far. But anyways, so now he's faced with, every time I go to do a task out there, I spend 3 hours in my car.
Yeah, I've got some good. I listen to Tom on YouTube, and I listen to.
I know you don't waste the time as far as that goes.
Well, but sometimes it is. It's like I'm twiddling my thumbs while I'm driving the truck, and I'm like, ugh. And of course, I'm looking for deals all the way there.
The problem is it's half your day.
Yeah.
Because he's, especially now, he's got kids to take care of in the morning, kids to take care of in the evening before the wife comes home to a degree, right?
Yeah.
So you got 5-6 hours. Well, that means only 2 productive ones on the site.
That's right.
And so what becomes is and this is in any businessman, it happens, at some point you have to go back to just using your head and let other people use their hands.
That's right. And so now, to your point, so I talked with an agent out there, and I'm like, hey, how much do you think we can get for this thing? Yada, yada. And we had a buyer real quick, got it under contract. They're doing a 1031 exchange themselves. And so, I extended, since they gave me what I wanted, I extended the closing.
You made it worth it to you.
Yeah.
You understood. Yeah.
Yeah. And so I extended the closing a bit, and now I'm looking to do a 1031 exchange, and, running the numbers, I'm going to have somewhere around 430, 440 to roll over into something. And you start looking at what you can buy, and it's like, I feel like I turned the page and it's a new chapter in investing, and I'm really excited about it, but I'm also, I'm nervous in a good way because I don't want to make a bad move. Yeah,
and you haven't anyways. And I'll tell you, so look, this is a typical thing. He did the right thing. When he sold his property, he tested the sincerity of the buyers with the wallet, meaning even though he gave them 60 days to buy this thing, at some point he had a 30-day spot or something like that, where he said $15,000 becomes non-refundable. That's his qualifier that well, worst case, they're not going to close. I make 15 grand for wasting 60 days.
That's right. Yeah.
So he did that. And so when he called me yesterday or the day before, I said, hey man, I'm at what we call we call they're past the
option period.
Yeah. The option period. Or we say their money's gone hard, meaning they've just lost some money and I've just gained some money.
Right.
So that's a term I use anyways.
Yeah.
And so that's a wonderful feeling because now you feel rest assured that you're going to close the deal. So now you're going to close in 30 days.
A little bit more than that. I actually have 45 days.
Okay, it's good though. But he's got 15 grand in his pocket now. He's got 45 days plus another 45 days after that if he needs it to identify another property to put the 450 on.
That's right.
So he's in a position where he can go find, maybe he finds something in 30 days. That'd be great. And now he can go ahead and put $10,000 down, non-refundable, to say, hey, I just need a little time, if he has to.
Right.
Because he's playing with their money that he just made, the 15.
Yep.
And so he gets that locked in, the deal closes, he rolls it, he defers quite a bit of, over 100 grand in tax money that he'll pay down the road someday, but he doesn't have to pay it now. Now he gets the benefit of using it and benefit it. He's going to roll it into this investment, whatever it may be. So you did everything right. And but in his worst case scenario is he doesn't buy anything. And in about a year, because he's closing really soon, right? Early middle of the year here, he's got 6 months before he's going to have to realize those gains and pay the 100 grand to the government.
Yeah,
your gains anyways.
Yeah,
so
that's right.
So it's wonderful. You still got to play with the money. Worst case anyways for 6 months, and then again he still made a sizable amount of money on this deal.
That's right.
And then he's got even if he paid the tax, he's still got roughly $350 cash to sit here and wait for what is truly a deal. And now he has no pressure to reinvest.
Yeah.
Right.
Yeah, and so it's. As you always say, Tom, there's no such thing as bad real estate, just bad deals. And so I'm walking around eyes wide open saying, that's a bad deal.
Yep.
That's a bad deal. That's a bad deal. And I really am. I'm trying to zone in on, and I think what's also, I would say, comforting or challenging to me in a good way is, even this morning you're talking about I got houses, I do commercial, this, that. And for me, it's only been residential.
Right.
And so I really am, because of what I can afford to buy now, I am looking at commercial.
Right.
Because rather than have 3, 4, 5 different properties that I'm trying to manage with the kids and all that kind of stuff, I'd like to just have one big one close by that I can go in, because I am a DIY guy.
Yeah.
I can fix a leaky faucet. I can,
right.
whatever.
And here's the beauty. In fact, Chris knows the problem because we don't live far from each other. But with his 400 grand, he could have bought the building that I just bought. Okay. I'm making $144,000 on that property right now a year annually. That was me paying $1.6 million cash. Well, he still is in a position that he could buy the same building with 25% down, and he would realize interest rates went up a tiny bit. He'd still make about $92,000 a year on that investment.
Right. And that's what I'm looking for.
Yeah. No, I know you are.
Yeah. So that's what I'm looking for. And so again, after you and I meet, I'm going to go meet with a commercial real estate agent, get to know her. What do you got? What are the numbers per square foot? It's just so I can start learning that side of the coin.
And you want to talk to, you want to start talking to several agents.
Yeah.
And try to talk to the best, sometimes the oldest, or not the oldest, but the most active within the group.
Right.
And and stay in touch with them. It's very important.
Yeah.
And we talk about all this stuff in the class all the time.
Right.
The things that have been very important to me is maintaining those relationships. And you know what we talk about in the class about how we do that. Which, by the way, if you're interested in getting in real estate, I have a mentorship. Real quick, I'll plug the book. I got a book, Wake Up and Smell the Real Estate. People that generally buy the book end up in the mentorship. So be warned if you buy the book. Anyways, you get the book on Amazon, Audible, and Kindle. And but even I read my own book just because it keeps me on track.
I mean, it's on my desk. I honestly, even though we talk all the time, I've been through the book once. I've implemented all the practices, but now that I'm in a position where it's like I need to go buy again, I'm going to be rereading through the book.
Yeah, it just keeps you on track. It just, because, when I wrote the book, I just kind of kept on what was the most important things. And I forget it myself sometimes. I have to remind myself just how it is. But yeah, this is really cool and it's exciting. And Chris, I know you got to go here pretty quick, and we can come back and do it again.
Yeah. But, can I plug one more question and get your thoughts on this? So
fire away.
So I found myself, I got these properties under contract, and I'm kind of sitting there and I'm like, well, what do I do now? It's kind of like, I feel like I'm kind of twiddling my thumbs. I'm waiting, and I'm still looking at properties all the time.
Right.
And so I've had multiple people, friends, family, like, why don't you just become an agent? You're looking at properties all the time anyway. You know the market really well.
It's not a bad position to be in.
Well, tell me this. So there are investors, there are agents, and then there's people that are agents, but they're also investors.
Yeah, when in a hot market, an agent can just clean up. To be quite honest, especially a commercial, which I love commercial property. But it doesn't matter. Any agent can clean up.
Right.
Really, I can just tell you, for agents, I used to have a joke. We'd talk and we'd say, never feel sorry for a real estate agent that loses everything, because they never earned it anyways. And that's because the money's so easy, to be quite honest. And it can be. Sometimes, I'm not saying it's exclusive, but it's funny to me.
Right.
But the fact is, if you're immersed in it, you will find out that somebody in your office just got a listing, hasn't gone on the market yet, and you can be the first one to bid on it.
Right.
That's a given. I totally stay in touch with agents for a lot of reasons, and that's one of the reasons I stay with a lot of different agents. Right. They can be apprised of something that nobody else knows except they do, only because it's in their office.
Right.
And so I don't think that's a bad idea. I think it's a good idea. Right. And the other thing is you'll be. I'm trying to think of, it's not the approach I do exactly, but the bottom line is you can say, hey, Tom, I found this great deal that I can't buy.
Right.
That it's a listing, and he can still make 3% on $1 million. He makes $30,000 and I buy it. And then when I flip it, I let him sell it for me and he picks up another 3%. Right.
Right.
So you end up making $60,000 on a deal that maybe you couldn't afford to buy yourself at the moment.
Yeah.
Or you could do whatever you're going to do.
What are is there a gray area in the sense of, doing your fiduciary duty as an agent versus
I'll just make it
investor?
simple for you. If you represent somebody as an agent, you 100% have to disclose. It's usually very inappropriate when you buy a property from the person you represent.
Right.
You follow me?
Yeah,
it's inappropriate.
Right.
Because it's a conflict.
Right.
You want to pay as little as possible, and you're supposed to be telling this person that you're going to get them as much as possible.
Right.
Total conflict. Yeah. But you don't have that conflict if you're making an offer on a property to somebody that's within your office or from another office. There's no conflict.
The other thing I can see is, we run into this quite a bit, but, you have a conversation with somebody. Hey, you want to sell your house? Blah, blah, blah. No, I think I'm going to put it on the market. Great. I'm an agent. Let me put it on the market for you. It's like
you can say, disregard that $200,000 I offered you. I can sell it for $350.
Yeah.
No, So like I say, those are some gray areas that I don't have that conflict, but certainly, look, there's not a better way to make a living in real estate as far as I'm concerned. People in the stock market, nobody keeps up with me monetarily that I know. Nobody can replicate the money that I make. I don't care how good their stock is. They don't make as much on the dollar as I do, and as often. And
no doubt.
Yeah. And so it's just the quickest, easiest way to get wealthy.
So it's, and it is fun. Like I said, quit my day job, stop taking with that comes I don't get the exact same check every single month. But also with that is I have freedom now to go make that check.
Well, and every time you get a deal, I tell people, and I laugh because this is why it never gets old. It feels like Christmas.
Oh, for sure.
You're looking, it's like a treasure hunt. Okay, imagine this. It's like a treasure hunt.
It is.
And then you find the treasure, and then you get it tied up, and now it starts to feel like Christmas is coming because you're going to close the deal, and you're going to resell the deal, or you're going to close the deal and start to get a big cash flow off it. And so it's just, what's better than a treasure hunt and Christmas? I'm telling you, there's nothing better.
There was my first closing at the title company, the officer or whatever, she said, so do you want to do you want this just drafted to your bank account? It could take 2 to 4 days. It's also there's a $25 fee on that, or I'll just cut the check for you. I said, I want the check, and I want it right now. I
might want to take a copy and frame it.
Right, and so it's like I got the check, and man, it felt so good. So fuel in the tank to keep doing it, and it's super exciting. So thanks again, Tom, for the book, for your mentorship, and I mean, really, it's good stuff.
Yeah, well, I'm really proud of you, Chris, because you grab the reins and you run with it. You take the information, you do something with it. Yeah. And so, hey, those of you that are watching, listen, in the link below, if it's not there, I'll put it here in a minute, but FlipAnythingUSA.com/webinar. Just go in there, sign up for the webinar, and you'll get it emailed to you. It's a pre-recorded thing that I've done. And take it or leave it. I don't care. I just want to put the opportunity in front of you. I don't care if you do it or not. But certainly you should take a moment to investigate, really. You can, here's Chris and the people watching here. There's a lot of people here that are in the room, actually. Herbert, he's an agent. He took it. He's about to make $120,000 on a house. He just about to close a deal on the selling side. He's about to make some big money on it. This one he bought in rehab. Josh is in here, is killing it in land. Russ is killing it in multiple properties, land and houses. And I think Robert too. I'm not sure. Warren Buffett. I got a feeling that might be an alias. But anyways, thanks for watching, everybody, and thanks again, Chris. And we'll come back. Maybe we can go, now that he's off, maybe he can start being on the show more time. For sure. If you like Chris, we'll certainly bring him back, and we can run around and evaluate some deals. Yeah. Sounds great, because we're in the market. He's in the market right now, big time. So thanks for watching, guys. We'll see you next time. Bye. See ya.